Welcome back to the second half of the Future Show. Ladies and gentlemen, we're now inside of an hour, less than 60 minutes away from the cash open for stocks on Wall Street. At the top of the show, we looked at some of the positive activity we were seeing in terms of the U.S. indices, how they are pointed higher. I want to bring in Alan Nuckman. He's the chief market strategist. You can see they still are. Let's bring Alan in to help us take a look at what's been playing out here in terms of some of the recent activity. And Alan, welcome. First and foremost here, I wanted to talk about, we just looked at the ADP reports. We kind of covered the employment narrative here and angle. Let's talk a little bit about the API report yesterday. I'm surprised I got that right with all the different letters there. But the API, the American Petroleum Institute, reported another draw on inventories. We keep hearing about how, there's demand concerns out there, but I think this is the fifth or maybe the sixth week in a row that we've seen a draw. Again, something to keep an eye on here, or is it really just, is it the demand narrative, or is it more coming from the supply side and some of the cuts we've seen there?
Well, that's the concern, that you haven't seen a price reaction to this continued draw, and that's interesting in itself. That the market just trades sideways, and again, it's got this cap of about 43.50. So breakout can quickly send that market, to 47 in that. And there's, like I've said in oil before, there's always price pop potential in oil, to the upside. That's always a concern. So being short is where where they often get squeezed. Now, that demand part of the equation, I continue to read about that situation and how obviously there was less summer driving. And, it is a fundamental fact, but let's tie crude oil to the other asset classes. It's really lagged behind. Stocks went straight up. We've got the S&P up 60% off its lows. I mean, that is just amazing. And then you obviously, we're going to talk about gold, but, the other asset classes continue to move higher, whereas crude's been stalled. That's still an opportunity. It's just a matter of when, I think.
Yeah, let's talk about one of those other asset classes that has moved higher before we get into gold, because copper's been on the move. And I noticed here, I took a look at it this morning, that continues a new high yesterday. I don't think they took that out so far in the overnight, but certainly bid there. I mean, this kind of feeds into the demand story as well, and economic conditions bettering, also tying into the housing market. And, well, ultimately, you can go all the way across on over into the Asia discussion as well, and some of the demand expectations and some of the, what we've seen there in terms of phase one trade deal and some of the purchases there.
Well, yeah, people do call it Dr. Copper. I'm not, I don't really endorse that as a true barometer of the economy, but it did rally from $2 to $3. So again, today's theme is, with every day with you, is the trend, and that is a trend. And if you look at FCX, Freeport-McMoRan copper company, that stock went from 4 to 16, and it's up 75% in the last year. So it's a very strong trend for whatever reason. It's been a great opportunity. It's been essentially straight up.
Let's talk a little bit about gold. You mentioned how, well, it hasn't necessarily been. It was straight up into the 2,000 level, but it's really stalled out a bit since, mostly sideways. I'm keeping an eye on the 1875 and the 2,000. Well, that, I think it's 1968 level. Talk to me in terms of what you have your eye on as far as gold right now, because even with the dollar weakening, gold still seems somewhat limited to the upside. And even with talks of more stimulus measures here, one of our headline stories this morning.
Well, so far, but yesterday was big. We printed 2,000, so psychologically that was a big idea. Obviously, we want to wait and see if there was a fake out breakout. But looking at it technically, I try and look at it more simply than you are. It's just a wedge. We've seen a series of higher lows and lower highs, and it's coming to a point here at 2,000. If you can break out above that 2,000 and sustain it, then it's been in a $200 range. That target's 2,200. Now, we did make new lows in the dollar yesterday. We made, again, to get to that 20 level, 2 has been the lucky number of the day yesterday. You saw 2,000 in gold, and you saw 120 in the euro currency, and therefore you saw new lows in the dollar index. So that's interesting in itself, that gold is still a ways away from its highs, even though the dollar made new lows. Now, yesterday, it was a test and reject. Yesterday, we made some new lows, but then we actually, I think, may have closed higher. I didn't look at it from that standpoint. But what was interesting is that the volatility actually was higher than the last low in the dollar index. So that's a sign that the trend may continue downward in that dollar. We just saw a little bit of unwinding and profit taking yesterday. Let's see where we go in the next bit. But it is positive to see the dollar continue to test those lows, again, new 2-year lows. But now we're still within that 92 to 94 range, waiting for the next leg.
Alan, does it mean anything for to see kind of limited follow through initially and it pull back? I mean, what do you look for when you see a breakout move like that? It had been kind of consolidating, so this is significant. It's going to attract a lot of attention, and we all know that this trade, for the most part, has been very overcrowded.
Right. So, we did see a bit of a bounce here in the last couple of weeks, and a bit of a stall in that dollar index. Again, I'm a big follower of trends, as are you, and I think it would take something significant to actually change direction, and look for this to continue. There are so many things that are trending to try and pick, like you talked about. Everything is moving right now to try and pick that turn in treasuries, gold, the stock market. And just the dollar would be, that would be, cataclysmic. You'd have to really be on top of your game to be the guy that can to figure out when this is going to change the game. So I would just continue to, use good risk reward, but continue to follow these trends and see if this can keep going on that path.
Alan, also, I wanted to just get your thoughts on the jobs data. I was talking with Stephanie about the significance of this. Ties into every one of the products that we've been talking about, whether it's,
right.
I mean, the labor market is a very significant factor right now, component in all of this. Financials, certainly, you could talk about the indices, even all the way into the metals. What are you going to be looking for as we head into not only the weekly, but also the more closely watched monthly into the end of the week?
Price reaction. That's all I do. That's all I do is, the numbers are the numbers. I look to see how the markets react to the numbers. Again, it would have to be a major tectonic shift to see things, see things top out, or for the market to be, this rally to be finished. So we always look at unemployment number. When I was a young kid down in the pits at the in the Treasury bonds, that used to be the marketplace. That was the biggest day of the month. Even in the last few years, that's been a focus, but it's had a very, very muted impact on the market. It may have a half hour impact, and then the markets look onward to other things. That's why we call these futures contracts, because we're always looking towards the future. So it's looking big picture, big trend, and we're all aware that jobs are recovering from a very, very negative place. But I don't think, the fundamentals are going to change that quickly. And I know that you guys talked in the last segment about, raising rates. At some point, that's going to happen. But, let's learn to listen. And we need to listen to what people had said. They said that we were going to go to negative interest rates. And that's very possible. We're down at zero. And they wanted interest rates lower for political reasons. They wanted the dollar lower for political reasons. That's not going to change anytime soon.
All right, we'll continue to listen to the Fed. We'll listen to price activity as it's king, we oftentimes say, and we'll also continue to listen to Alan Nuckman. He's the Chief Market Strategist at Agora Financial, joining us